I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today we're talking about loan programs. You know, what type of mortgage is best for you when you're buying a house?
It's like the guy at the baseball field. It's like, come get your peanuts. It's like, you know what? Come get your purchase mortgage. We got purchase mortgage. We got caramel. We got salted. We got no flavor. So yeah, this is just for purchase mortgages.
That's right. And each borrower is unique, and you have your jobs, you have your down payment assets, you have income, you have credit items that are unique, and each program is going to be suited a little bit differently for you.
Yeah, I'm going to just bring some up real quick. I think in life we tend to make things too easy. You know, everyone gives things acronyms. Everything needs to be super short, you know, and sometimes we do ourselves a disservice by making things too simple. You know, just let me just cut to the chase. You know, can we just get to the point? It's like, well, sometimes there needs to be color. And in our podcast today, there's a lot in here, okay? So this is a very big topic. But what we're going to try and do without doing a disservice is to make it simple. So we're going to try and do both things at once, and we can have a follow-up podcast later. But I want to get that out.
Okay, good. I mean, we're going to put this is going to be very good on YouTube. It's going to be very visual because we're going to be showing the grids of, so again, if you're only watching this from a podcast audio, you won't be able to see these slides, but if you do look at the YouTube, you will be able to follow. Okay, so really we're answering the questions: which loan has the lowest monthly mortgage payment? What are the unique features? Mortgage insurance, you know, what credit score requirements and things like that. So what we'll do is, and they all affect your price range, and every borrower is going to be fitting into a different grid here. So let's just bring up the next slide, which is the loan type comparison. Let's just look at, we have from the top all the way down on the left side, you see we have the VA home purchase, VA home loan, you know, we have the FHA product for the home purchase, the home ready or home possible, a conventional loan, and then a jumbo loan. And then we have tiers going to the right, you know, for down payment minimums, minimum credit scores, mortgage insurance, and then some good general notes. So let's just go down. Probably best just to go through the loan programs all at once, you know. So like, for example, VA, 0 down, okay? That's the minimum down, 0. And there is a requirement to put down some down payments on a VA, but again, talk to your loan officer. It gets complicated if you have used your VA loan before, if you don't have full entitlement, but generally speaking, it's 0 down. For FHA, it's 3.5%. That's the minimum down. And then for a program called a Home Ready or Home Possible, that's a special program, just 3% down. And then the regular conventional loan, minimum down is 3% if you're a first-time home buyer. Little caveat there, like if you're a first-time home buyer. Whereas Home Ready and Home Possible, you do not need to be a first-time home buyer. But anyway, so conventional loan is 3% down, and then jumbo financing right now, it's about 10%. That's the minimum down payment.
Right. Okay. So if you look at this from where we started with VA all the way down to jumbo, it's ranging from 0 to 10%. So there's quite a big swing, but the majority are going to be, you know, in that, call it 3 to 5% range. So again, a pretty decent swing there. But when you boil it down, a lot of our borrowers, you know, will have between 3 and 5%. Okay. What's next? We got minimum credit scores.
Oh.
Okay, so the minimum credit scores, we'll start with the VA, and we'll go down. So VA and FHA, we've talked about this before, but they're government loans, and so they are underwritten, not the same, but they're underwritten similarly. So the minimum credit scores are 580 for those. Okay, when we move over to conventional, where we have again the Fannie and Freddie product, our minimum credit scores are going to be 620. So pricing is not going to be very good, but theoretically speaking, 620 is what a conventional Freddie and Fannie would allow. And then when we go to jumbo, there's a little bit of caveat, but I think we're saying that we're saying 680 or 700. There at times it's 680, and at other times it's 700. But it's going to be in that range.
Yeah, that's right. We haven't really seen any jumbo products available below 680.
Mm-hmm. And then also I would throw out, too, within our jumbo loan product, we have a first and second loan combo. And so that would feel and look like a jumbo, and that has about that 680 to 700 credit score as well.
Okay, so the next category is mortgage insurance. Okay, so let's just talk about mortgage insurance right from the top on a VA loan. There is no mortgage insurance on a VA home purchase. Now, just to make sure we throw it out there, there is a funding fee. If you're not a disabled veteran, you're going to have a funding fee. And that fee will vary whether you've used your VA loan before or not. Okay, so that's just to throw it out there. There's no monthly mortgage insurance, or there's no monthly fee that VA charges, but there is this upfront funding fee they roll into the loan.
And that's actually how they're able to not have a monthly mortgage fee, is because they have it in that one lump sum fee up front.
So FHA has a range of between 0.8% and 0.85%, and that depends on your down payment. But just it's in that range. Basically, anything with 5% more, or if you put more than 5% down, you're going to have it at 0.8. And if you're 3.5% to 5% down, you're at 0.85. Okay. The next program is that Home Ready. That mortgage insurance is really discounted. It's discounted. I mean, if you have excellent credit, your mortgage insurance factor is going to be could be 0.27. And then depending on your credit scores, it could be all the way up to 1%. I mean, it can be, but we see usually between 0.27 and 0.5. And then for standard conventional loans, it depends on what your loan to value is. If you're putting 15% down, you're going to have mortgage insurance like 0.1, but if you're putting 5% down, 10%, anyway, it'll be anywhere from 0.1 to, 0.5% is pretty typical.
Mm-hmm. And one of the biggest differences between these programs we just talked about is with FHA, that mortgage insurance stays on for the life of the loan, versus on the conventional product, once you hit certain benchmarks, it can fall off. So that's a big difference.
Let's take just a moment to go through the notes. Like, just what are important things that we want you to know about these programs. And I think that Tom and I can go through it in T. Maybe you can just go, after I'm done, you just let me know and let everybody know if you have anything really to add as well. You need to be a primary residence owner. You have to buy the house, live in it. Okay, you can't make it a second home. You can't make it an investment property. Again, this is for active or veterans, active military veterans, surviving spouses. And then those are my notes there. Again, the interest rates are very generous, even if you have lower credit scores on VA. It is the best loan. I mean, when it comes to the interest rate and costs, the VA loan, there's nothing better. And then FHA, the best notes I have is basically similar to VA in the way that it's only for primary residences. There's no second home, no investment properties allowed. And it generally is fitting somebody who has lower credit scores and lower, and low down payments. And then the Home Ready product and a Home Possible. Those are Fannie and Freddie. They market it as Fannie and Freddie products for low down payment, but they have income limitations, okay? There is some zip codes or some sections in the census tract that don't have income limits, but generally speaking, there's income limits, and it's a percentage of the median income. Right now, nowadays, it's about $66,000, I think, in Maricopa County. But again, that's going to change almost annually, and that calculation can change at any time. Then that's my note for that. Conventional loans, it's just something to keep in mind. If you have excellent credit, and even if you're putting 5% down, 5% or more down with excellent credit, you should be looking at a conventional loan. But again, conventional loans are limited to the conventional loan limits, and today they're at $647,000. That's the 2022 limit. So if you're watching this, it's 2023, 2024. Gosh, it could be, it's going to be higher. And then anything above that conventional loan limit is going to be the jumbo loan. Okay, that's when you're in jumbo loan territory, and so that's something to note there about jumbo loans. And jumbo loans are only for primary residences and second homes. We can't right now. We don't have jumbo loan investment property product, and it requires more reserves. You have to have more money in the bank, and that's all my notes for those programs. Just to throw them out there.
Good. Well, I think that you hit basically everything that you needed. I would just probably add, you can, believe it or not, you can actually have a couple VA loans at one time. So some people don't know that. I think that's a good little tidbit note. FHA, you can't. So you have to be, careful about that. People don't know about what we call and Ed, I don't know what you call them, the Fannie and Freddie 97s. A lot of people don't know that you can make $1 million a year and still only have to put 3% down. There is no income limit there, but you do have to be a first-time homebuyer.
Right.
So and what a first-time homebuyer is considered is just not having owned a home for 3 years. But that's always interesting. But I would probably end by saying this. In my mind, I always, when I get a call, I have 3 different buckets that I'm putting people in and calls in. Number 1 is going to be credit, okay? And depending upon that credit, they decipher and they go down into the different buckets. Number 2, down payment. What do you have for a down payment? Number 3, loan amount. And with those 3 simple questions, what's your credit, what's your down payment, what's your loan amount, you can fit them and figure yourself into VA, FHA, jumbo, conventional, etc. Those are 3 really important questions.
Yeah, absolutely. That's perfect. All right, so I think that summarizes everything we wanted to do on the podcast today. If you have questions, right, reach out to us. If you like what we're doing, click the like button. Guys, email us, call us with any questions you guys have. The Mortgage Brothers is here to help. And everyone have a great rest of your week.
All right, thanks a lot, folks.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com, and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process.
Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.